welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as a recap of last week's Friday's session, which actually did not turn out to be the kind of session that bulls were anticipating. At one point, we did see that the Nifty was looking towards claiming the 22,800 mark for the first time. But come the second half of the session, we did see that the Nifty barely managed to hold on to 22,400 on the downside. And this was after sharp profit booking really took place in the last hour of trade. However, on a weekly basis, we've actually seen the benchmark index extend gains for the second consecutive week as well. Now, another thing to note is that the volatility index, or the India VIX, has risen about 40% in the last 7 trading sessions as well. So that will be a key monitorable as we begin this new week. Well, apart from this, of course, markets will react to global cues following weak US jobs reports, strong cues from Wall Street, as well as domestic earnings as well. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. Now we start the week on a very fresh and very strong note. The daily chart of the Nifty is right there in front of you, and I'm looking at a bumper day, and I'll examine the reasons right there in front of you. The Nifty, as Sakshi pointed out, ended in negative territory on Friday, 22,475. It was a very volatile session. The range of the Nifty between the high and the low was about 450 points, so there was a range expansion. Now let's look at how the Nifty will move. Remember, Friday's close was above about 127 points above the 21 point exponential moving average. So that is a very big positive as far as the Nifty is concerned. Today there is a gap up that's expected because of the way the gift Nifty is moving. So about an 80-90 point gap up is there. Now what will happen beyond the gap up? At that point of time, the Nifty will be somewhere like 22,580, 570, and from then on the following reasons will take over. There's been a very good clarification that's come from the Finance Ministry saying that rumors of tax laws being changed for the worse for the stock market have been created. So that's a very big positive. Apart from the gap up, this will act in benefit of the bulls. There are very strong cues coming in from Wall Street. If you see, the Nasdaq up 2% on Friday is highest since April 15th. The Dow index is highest since April 10th, and the SPX is highest since April 12th. Sakshi will give you more details on how Wall Street has closed. Apart from that, look at the US 10-year bond yield. The chart is there right in front of you. It is down for the third day in a row at about 4.512%, and this is again a 3-week low. Crude oil, very quiet, now near 2 months lows. If you look at the NYMEX crude oil graph, it is at about $78.57 a barrel. This is about 10% lower from its April 12th high. So these are all positives. Weak US bond yield, weak crude oil prices are positive for domestic equities. Very strong cues coming in from Wall Street, and of course the clarification from the Finance Minister. So about a 180 or 150 point move is going to happen on this reason. Now let's analyze what should you be doing. Once you see 22,600 taken out, which is the options, very basic resistance at that level. If you see the call setup there, if you see the option setup there as far as the May 9th expiry is concerned, 22,600 has a very minor addition of calls, so that should be taken out. And then my assumption is that this week you will see the Nifty retrace up to 22,800 again. Remember, for the last 2 occasions it's not done, it's not been able to take out 22,800. Again, very strong supports coming in at 22,450, 22,400, 22,300. These are very strong put writers that have come in, and they will be helping the bulls. So if by any chance you get a dip towards 22,500, 450, 22,400, which is the 21-day exponential moving average, that has to be purchased. And on its way up, if 22,600 is taken out, then of course the bulls will be ruling the roost up there on Dalal Street. Now what else to expect? You have 3 earnings to which Nifty will react to. These are all who came over the weekend, and I also want to mention the sheer positivity that Kotak Mahindra Bank's earnings will bring in. If you see the numbers, they are very good. The details will be given by Sakshi. Remember, on a year basis, Kotak is the worst performing Nifty stock, down 19% as far as prices are concerned, but very strong profit after tax, up 18%, improvement in net interest margins, gross net performing assets, gross non-performing assets are down, and of course credit growth is a strong high teens, up 17%. So Kotak will do wonders. Britannia, modest numbers below par, and of course you have numbers coming in from Titan. Titan is up 29% on an year-to-date basis. Fairly decent numbers. Sakshi will give you all those details as far as the profitability and sales growth are concerned, but good ones from that. Now, there are no earnings from Nifty today, but during the week you have 9 Nifty companies reporting earnings, and the most important, Tata Motors and State Bank of India, the numbers that the entire market will look forward to, will be coming in this week. Tomorrow, it being Tuesday, is the third phase of the elections, and you'll see very, very strong hopefully voting now happening. About 88 seats go for poll. The entire contingent of Lok Sabha, 25 seats from Gujarat, 2 from Goa, 10 from Uttar Pradesh, and so on and so forth. We'll get you those details. So Bank Nifty as well as the Nifty, I am expecting a very, very strong gap up, and from then on the bulls will be the driver's seat. Again, I repeat, you're most likely to see an all-time fresh high on the Nifty and the Bank Nifty this week. Sakshi.
All right, let's look at how the global cues are stacked up. So strong Friday close for the US. S&P 500 index and the Nasdaq also rose by about 1.2 to 1.9% respectively. The Dow Jones Industrial Average gained by almost 1.1%. Remember, it's the soft US jobs report news that has initiated some hopes as far as rate cuts are concerned from the US Fed. Very, very strong across the board US move is what we saw. As far as the Asian markets are concerned, they hold steady in the early morning trading action as traders await China's return from holiday, with mainland markets expected to rise due to supportive policies from Beijing as well. Straits Times up by about 0.4%. Shanghai is now indicating about a 0.9% of a move right now as well. So those are the kind of moves that are stacked up as far as Asia is concerned. The trends on the GIFT Nifty indicate a gap up start for the Indian benchmark index. The GIFT Nifty was trading at around 22,685 levels. When I last checked, a premium of nearly 110 points from the Nifty futures previous close as well. Now, as far as the flows are concerned, remember, overseas investors remain net sellers of the Indian equities for the second consecutive session on Friday. The foreign portfolio investors offloaded stocks worth about 2,392 odd crores, while the domestic institutional investors stayed net buyers for the 8th consecutive day and mopped up equities about 690.5 odd crore rupees on Friday. Now, as far as some of the stocks are concerned, a lot of stocks will react to their earnings. Kotak Mahindra Bank will be the first one. The bank has reported an 18.2% year-on-year jump in the standalone net profit of 4,133 crores for the quarter, as well as its net interest income has risen 13% year-on-year to 6,909 crores. The net interest margin during the quarter has risen to 5.28% as compared to 5.22% in the December quarter of FY24. The bank's gross net NPA has seen a dip to about 1.39% in the March quarter as against 1.78% the year ago. Net NPA has stood at about 0.34% as compared to 0.37%. So strong numbers thereabout. As far as Avenue Supermarts is concerned, the parent company of the retail chain D-Mart has reported a 22% year-on-year jump in net profit to 563 odd crore rupees in March quarter compared to 460 crores in the year ago period. Revenues have grown 20% to 12,726 crores in this quarter, as well as EBITDA for the March quarter has stood at 944 crores. The EBITDA margins have come in at 7.4%. As far as Titan is concerned, the jewelry and the watchmaker has reported a standalone net profit of 786 crores for the March quarter, up 7% from 734 crores a year ago. Now the company's revenues have stood at 10,047 odd crore rupees, up 17% on a year year-on-year basis. EBITDA for the quarter grew about 6% year-on-year to 1109 crores, and the margins, however, is the pain point. It declined by 90 basis points year-on-year to about 9.9%, and there is some concern on softer margins to continue as far as the coming quarters is also concerned. So that is where the brokerage houses have raised the concerns too. As far as Britannia is concerned, it reported a drop of 3.2% in the consolidated net profit to 538 crores in the March quarter. We've also seen the revenues rise about 3% to 4014 crores in this quarter as well. As far as Tata Technologies is concerned, that's another earnings that I'm watching out for in Q4. The company's revenue jumped by about just 0.9% odd and increased to 1301 crores. As far as the EBIT is concerned, it stood at 211 crores, up by 0.76%. However, the margins declined by 2 basis points to 16.21%, and the net profit dropped by 7.6% to about 157 odd crore rupees. We'll continue to watch out for this one as well. Inox Wind in Q4 has reported its revenue surged by about 176% to 528 crores, as against 191 crores in the previous corresponding period last year. As far as EBITDA is concerned, it stood at 102 crores versus just about a loss of about 30.9 crores in the last year's quarter, and the margins have stood at 19.3%. The net profit has come in at 36.7 crores as against a loss of 119 crores. So you could see the stock reacting to the earnings positively in trade today, Shail.
Well, ladies and gentlemen, some other stocks that have also reported their fourth quarter earnings are Zen Technologies. The management chairman and managing director, Mr. Ashok Atluri, will be with us at about 10:10. Keep an eye out on this particular stock as well. Very, very strong set of earnings coming in. Fourth quarter profit up 90% year on year to 33 crore rupees, and sales up 83% at 136 crores for the quarter gone by. Also, market darling CDSL has reported a very strong set of numbers. Profit has nearly doubled in the fourth quarter. The stock, both these stocks will also react extremely positively. Let's hope that works out as we think it is shortly. Mr. Sharad Avasti, head of research for the Private Client Group at Calcutta-based Smith Securities, is going to join us. I think he's with us. Good morning to you, Sharadji. A bit of a, how should I say, fearful sentiment on Friday. The index did close lower, but lifted very smartly from its intraday lows. Clarifications coming in from the finance minister on potential tax rates in the new government, and of course very, very strong cues from overseas. How do you see markets? What do you think this week will hold for bulls or bears?
I think it will be a range bound kind of market, considering the geopolitical scenario we are looking at. Particularly the Hamas tensions seem to be coming back to the fore. We were expecting some development on the ceasefire there, but not much is happening on that front, and most probably it would continue to linger on. So I think that bodes negatively for us, because then probably you would have higher oil prices. And on the positive side, I think we did a lot of correction on Friday, as you rightly mentioned, because of some anticipation of something that was not even announced or nowhere to be seen, but the markets are like that. So I think we have already corrected substantially, so I don't think much of a correction will happen from here. But largely we would be range bound maybe this week, not much upside to the markets because of the geopolitical tensions, in case some developments happen there, which I don't think can happen over a week's time, considering the way they are poised right now. So I think maybe this week you would have largely a range bound market because of the geopolitical tensions particularly. If they were not to be seen, I think we could be in a bullish territory. At least we should start on a bullish note because of this tax issue being clearly denied by the government. But I think the geopolitical tensions will remain at the forefront for most global markets.
Okay, range-bound trade. How about Kotak Bank's earnings? It's a blowout there. The data will be right there in front of you. The stock, unfortunately, caught up in all sorts of trouble and all sorts of pain. What are your thoughts on Kotak's fourth quarter?
The results are a beat on all fronts, as you rightly said, and I think this will continue for some time because the way they are planning the business in terms of focusing on Gen Z, etc., that should play out very well. Ideally, that's what I think we will need to see over the next, 1.5 year. The management transition has more or less been smooth. How it translates into numbers is something we will need to see. Regarding the valuations, I think now the valuations are very attractive, and the recent issues that have bogged down, if you hear the management commentary, they're talking about a 400 crore kind of impact because of the RBI directive. And I think that's not very material considering the size of the bank. The price reaction has been much steeper vis-a-vis the actual impact of that. And I don't think it's a very long-term thing. It would get resolved over a period of, say, 1 or 2 quarters. And the other initiatives that the bank is taking should play out. And high probability the bank would claw back to, 3.5, 4 times price to book easily. I think the major part that sets Kotak Bank apart from the rest of the pack is growth at reasonable risk, which is growing the bank at more than the banking industry and still continuing to hold NPAs at much below the desired levels. So I think that's a very positive development for any finance institution. And with this management transition over the new approach, I think growth would also be very strong in the next 2 to 3 years. So I'm very positive on this. I think one should continue to add initial targets could be around 2021 and then beyond that.
Okay, very good morning to you, Sharad, and thank you for taking the time out for this morning discussion. Your sense on Titan after the earnings is something that I wanted to take a view on. Although the numbers on several parameters have improved over the last year, but it's the margins factor that seems to be a pain point. And we've seen Citi come out with a neutral target on this stock, and which the target price has been slashed by them to about 36.50 now from 4100 or about there of earlier that they had. They're saying that the stock could remain under pressure in the near term with the expectation of the company to continue to prioritize growth over margins expansion in the near to medium term. How would you look at Titan?
Yeah, I would more or less concur with the view. I have not been very positive on Titan for quite some time now, specifically because of the valuations. It's not that the company is bad or something. Regarding the quarterly numbers, I think volatile prices do affect, and the economic scenario is also not very clear. So I don't think there is a lot of gold buying happening from the Indian side. Internationally, China has been buying a bit of gold, and they've commoditized it to the retail level. So that is finding some space because of the uncertainty there. And that is resulting in some fillip to gold. But if you look at Indian gold buying, I think gradually there is a possibility to take. I would be more bullish on the carrot line kind of business that they have. I think the female side of the population is getting more into work and the wear consciousness and that kind of demand, which is into daily wear and semi-fashion wear, not really only the jewelry, bridal jewelry kind of stuff. Though the ticket might be smaller, but I think that is something that will grow up very smartly for them, and that's a long-term trigger. Even the wearables could grow at a very strong rate. The only point is that the valuations at which they trade usually leaves no room for disappointment. So even a quarter of disappointment could lead to very sharp cuts. So that is why I'm not comfortable with Titan. And I think the main business is jewelry, which would be largely linked to gold prices. Gold prices go up, your total revenue seem to be much better. But if you adjust it for the gold price movement, I don't think the gold jewelry business is doing such wonderful things. It's more on the carrot line kind of business or, the wearable kind of business that can grow at a very high rate. But that remains a smaller portion of the total pie. So I think over a long term, it will grow at a very handsome rate the way the company plans it. But valuation is the discomfort. So I'm not very comfortable buying at these valuations. And I think over the medium term, maybe gold prices would also not be very supportive after this rally. So I find very little triggers in the medium to short term for Titan to move any further.
Okay. Apart from this, the other stock that I wanted your view on is Britannia. We've seen the laggard performance from the entire FMCG space for the last 1 year odd. How are you looking at the earnings? First, Dabur came out with the earnings, and now Britannia. Even though there is a drop of 3.2% odd in as far as the profitability is concerned, but are you hopeful of with the projections of good monsoons coming in that finally the sector may be coming off? And are there any signs in this earnings from these companies?
Yeah, largely Dabur, as you clearly mentioned, that they spelled it out very clearly that maybe the rural side of the market is picking up. And I think a major part of the population still lives in rural India, and total India consumption cannot grow up without the rural income, rural people participating. So I think gradually that is improving. Monsoons are expected to be normal. In the first few months, we have seen heat wave issues and all that, so that could, stoke up inflation in the very immediate term. But beyond that, I think, yeah, it is very positive. We are seeing some green shoots on the rural side, and most probably the difference between urban and rural should catch up substantially in favor of the rural income going up and catching up with the urban income. And I think that should play out very well for most of these FMCG companies. Britannia, again, if you look at it, it's trading at what, 46, 47 times 12-month forward earnings. Uh, so I think, yeah, it's good, but I would be happier buying it around, 10% lower. So stagger your buying over the next 10%. I think that would make much sense for buying into Britannia. And I think, yes, certainly the rural side of the improvement is visible, and most probably over the next 2-3 quarters, you will see even better commentary from most of the FMCG companies. Dabur, though, would benefit more because they have a stronger rural footprint.
Sharadji, although earnings have been fairly strong as far as the frontline banking sector is concerned, even stocks like Federal Bank and a whole host of mid-cap banks have come up with strong credit growth, strong improvement in margins. What do you like in the banking sector? State Bank reports on May 8th.
So on the PSU side, I think most of the valuations really capture in all the positives that are there. Now we are looking at most probably some surprises or variables that come out of the receivables book or the NPA book. And I am not very happy buying into those stories. So I don't think the PSU side, we can see much upside from these levels. There is a lot of hope buying. There is a lot of PSU, sentiment-wise, PSU positive sentiment. So that's leading to some buying. And they've performed exceptionally well over the last 1.5, 2 years. So that is also catching up because many people just monitor the prices of things. But I think most of the positives are not priced in, and I would be more comfortable buying into the private sector banks, the like of Kotak and HDFC, where I think the valuations warrant substantial upside from current levels as the improvement starts to show up in the numbers. Because most of the improvement, as you know, in most companies, it's the valuation multiple improving, and I think these two banks offer that potential. Rest of the pack, I don't think there is much of left on the table to gain out of it. So I would avoid rest of it. I think I would focus on an ICICI bank or a Kotak bank. The revaluation triggers are very strong there.
Fair point. We've often pointed out to the fact that Sharadji is a very cautious investor, and he parts with his money with much difficulty buying into deep value rather than momentum. Apart from private sector banks, Sharadji, where do you think does value lie in a market that's consolidating at record highs and is perhaps headed much higher?
Yeah, yes, I agree that it's headed much higher. What time frame, that is debatable. I think IT would remain a very good pick. I think when I look at the space, agrochemicals is there, but IT within the front line, you have a lot of large cap names, mid cap names there. And I think the type of derailment we have seen there, there is a high probability you would catch a lot of, fancy once this improvement happens over the next 2-3 months with regard to the US sentiment around interest rates. And I think most of the IT stocks are trading at very reasonable valuations, and there is a possibility that most of the earnings they are reporting would receive substantial fillip over the next, 2 or 3 months and revised much higher. Coforge, certainly, I think it's one of the most beautiful bets that you could have. The valuations at which it is trading is very attractive. The type of growth rates they have set for the next, 6, 7, 8 years are handsome. The company could grow at a multiplier level. On the flip side, I think, yeah, they have lost a major management which was very supportive of the business for the last few years since they got on board. Now they are not there, so it's an independently managed company. That is the only flip side I see in Coforge. The rest, I think the recent Signity acquisition and the way they're focusing on AI and other areas, and they've already grown at much better rates for the last 5, 7 years. And the forward targets are very aggressive, and the valuations at which you are getting are attractive. So if you have a longer term horizon, I think even this 4,400, 4,500 stock could be a multi-bagger you could look at. I think even Emphasis could be a good story based on the reversal in interest rates that could play out very positively. Among the larger names, I think LTI, Mindtree, and Infosys offer excellent opportunity. I think Infosys for targets initially of around 1800, 1900. LTI, I'm very positive. I think the merged synergies should play out very well. Again, if you're looking at very strong re-rating, even Tech Mahindra could be a very good bet. Not in terms of known valuations right now, but I think there is a lot of re-rating potential there. So IT certainly looks like a very attractive space to me. I think there are multiple levers that will turn around over the next 3 to 6 months. And for a company, I think even long-term targets look very interesting to me.
Okay. I also wanted to ask you, Sharadji, as far as Tata Technologies is concerned, and the kind of earnings that have come out for the first time after the listing as well. How do you see the earnings this time around? Revenue which has jumped just about 0.9%, EBIT just about 0.7 or 8%, kind of a move on the upside. But if we look at the net profit, that's dropped in fact by 7.5%. How would you look at Tata Tech now?
See, again, something that had a lot of fanfare and interest after the IPO. People were not really willing to see that most probably prices will come down. But I think, this is a company where the business is very solid. The way they have built it around, it's very similar to TCS, where most of the group business is coming to them and they are doing some excellent business. They have tie-ups with some of the most interesting companies or the performing companies within the electric vehicle space that is very relevant. Similarly, within the airline business, they can grow substantially with their India support. But right now, what we are looking at is 15-20% kind of growth over the next 2-3 years till 27 maybe. So what 20% growth when you pay something 50-51 times, I think these quarterly disappointments don't offer much space unless the management commentary comes in very positive regarding some big order win or something and then great thing can happen. So I would not be comfortable, long term, it's an excellent company, the type of business they are doing in case they can scale it up with some, announcements or some big order wins. And I'm very positive on the airline business, what they will do. But in terms of valuation, I think it's a bit on the expensive side, trading at 55 times forward with 15-20% growth rates. So I think, yeah, you could see a sharp reaction on the downside on this as well. And wait for some correction. I think these are excellent companies. Once they announce some big wins, so you could get back into them.
Very quickly, I think we just have the pre-opening rates now, about 255 points higher as far as the Nifty is concerned, 22,627. But I think it will settle down. It's gradually coming off that mark, 163 points higher now at about 22,660. We'll wait for the Nifty to settle. We'll also look at some of the heavyweight counters we are looking at in the pre-opening today. Kotak Mahindra Bank, let's look at how that one is opening up in the pre-opening trades. As far as post-earnings are concerned, very strong numbers coming in from Kotak Mahindra Bank, and remember the bank has been under pressure after the recent regulatory actions, and therefore after that you're seeing a 7.7% spike in the pre-opening rates as far as Kotak Mahindra Bank is concerned, 1666 at this point in time. Let's also look at some of the other heavyweights in the earnings factors, so Titan, Britannia, let's look at all of these stocks as well. Avenue Supermarts, let's look at how that one is also opening up. Inox Wind reported very good numbers, let's look at that one as well. Titan is showing a subdued move, about 3.8% lower at 3,400 odd levels as the earnings came in below estimates as far as the earnings on margins are concerned is a concern. Inox Wind, a 10% uptick is what you're looking at after the earnings in the pre-opening trade, 677. Let's also look at Britannia and Avenue Supermarts. Those were the other two big earnings that were reported after the market hours on Friday over the weekend, and that's why we are keeping a keen eye out on that as well. So apart from this, let's also look at some of the heavyweight counters. So Britannia just about 1% higher, 47.88 after the earnings, and we'll also look at the heavyweight counters like HDFC Bank and Reliance Industries, how they are opening up after we check Avenue Supermarts as well. So those are the key earnings and stocks which are on brokerage houses radar as well. Flattish at this point in time, not getting the numbers as far as HDFC Bank is concerned, but Avenue Supermarts is showing actually a strong move of about 4% odd at about 4,800. Anything else, Shail, that you spotted?
Yes, actually, I think apart from the index heavyweights, there is a lot of action as far as prices are concerned. M&M, no stopping the counter, fresh high, another 1% higher, 2209. The pain in IT seems to be purchased into, So Emphasis is looking good, 0.5% higher, 2305. There is a fairly strong uptick when you look at the NSE 500. Tata Technologies, unfortunately, another 3% lower. Earnings coming 27% lower for the fourth quarter. That's fairly painful. Let's look at the top gainers. Very strong show by Birla Corporation as far as fourth quarter is concerned. This mid-sized cement major is up 9% now, 1700 rupees for you. CDSL, as I had pointed out, 5.21% higher, 2188. I think this will be a record high. The rally is now deepening into the smaller banks. J&K Bank is up 4%. Equitas Small Finance Bank is up 4%. I think it's the entire banking sector that's now getting lifted up after Kotak's strong earnings. Kotak has now settled 3 percentage points higher, 1598. Let's look at what makes up the Nifty. Apart from Kotak, Bajaj Finance, remember this is around its 200-day moving average, 1.7% higher, 7050. The good point is that 9 out of 10 index heavyweights are in the green. Only ICICI Bank is down 0.3%, nothing to be worried at all. Reliance 16 rupees higher, 2884. State Bank of India a rupee higher, 832, just a rupee higher. And HDFC Bank 5 rupees higher, 1524. Infosys flat. So the 22,600 Nifty call for May 9th will be in action. Let me just see what this call shut shop at on May 9th. This was 95 rupees, down about 120. So we'll keep an eye out on this. Remember, 22,600 is a very mild resistance. If that's taken out, then things will improve better for the bulls. But for the moment, the battle for the index will continue at 22,600. I think we are waiting for Mr. Ratnesh Goyal, Senior Technical Research Analyst at Arihant Capital Markets. Fairly decent reception for Kotak's earnings. Sharadji, do you think you are a bit disappointment? Did you expect a 10% gap up, or this is fine?
No, I was not expecting, because the market fancy is not there. The recent resignation has further derailed most probably some expectations. So I think, yeah, it's going to be a slow process, a grinding process, but I think every quarterly number will substantially improve your outlook regarding the bank. And this RBI directive resolution, I think that will be a very big trigger for them. And they had issues, so I think I would not be very disappointed, because the mood around the stock is very somber right now. So 3.5% is good enough for a frontline stock, and 1 quarter most of the re-rating will not happen. I think gradually over the next 2 to 3 quarters, a major part of this re-rating will happen.
Okay. We'll also pay attention to the PSU pack, ladies and gentlemen. Remember, on Thursday and Friday, a lot of PSU stocks were in very fine shape, led by REC, Power Finance Corporation, BPCL, the likes of ONGC and all. Sharadji, would you want to comment on valuations of REC and Power Finance Corporation? Both of them, just rocketing in the last week. Are you worried there?
I would not say I'm worried, because a lot of the valuation uptick that has happened in these stocks has started from very dismal valuations. Maybe we have spoken in your earlier avatar way back when they were trading at 0.25, 0.3 times price to book. Even currently, if you look at REC, what is it trading at? Somewhere around 2 times price to book. They're advising 15% kind of growth, which they should do with their existing, profit additions. So I think long-term growth is very good. Not much of NPA additions has happened. In the long term, how they manage it will be a key thing to watch out. But within the two, I think I would be more comfortable buying a PFC. It's still trading at around 1.6, 1.7 times price to book. And with a 15-16% kind of growth, no risk on the asset side. My targets, roughly, even if I consider conservative targets over the next 2-3 years, these stocks could still deliver you a 15% annualized, 15 to 20% kind of annualized return, even from current valuations. So long-term wise, yeah, it's very decent. But I think some regulatory changes have come in recently announced recently by the Reserve Bank. that could provide some negative impact on these stocks because of the provisioning requirements, etc. So that could be a short-term negative for them. But if you get some dips, I think they are still decent ideas if you're happy with a 15 to 17% return over the next 1 or 2 years.
Okay, I'll just also mark Zen Technologies. Its opening circuit up at about 7. Let me just see what the price was. 752. No, Zentech is opening 5% higher at 1142. This is the circuit limit. Remember, it's reacting to its earnings. A sea of green across the entire defense pack as well. Anything that catches your fancy, Sharaji, as far as defense is concerned?
Within defense, I think most of the companies have just rallied substantially higher. I would still continue to go with BEML. I think that is a good mix of railway, defense, and everything. So, and construction equipment. All the three segments should do very well. And defense being lumpy, I think purely depending on defense would be a bit risky because occasionally, there might be periods where you don't really get so much conversion of order inflow into revenues, and there could be some delays also. So a diversified bet makes more sense. And I think railways, construction equipment, as well as defense, all the three segments should do very well in the long term. And even the government is talking about some impetus to logistics and conveyance, communication, etc. for mobility, etc. So I think that should do very well for railways as well. So I think BML could be a good bet you could look at with a mix of railway, defense, and infra equipments.
Okay, let's look at some more stocks then, which are reacting very, very sharply higher in the pre-opening trading session. Anup Engineering, we don't talk about this stock much on the show, but the stock is sharply higher in trade, and about 16-17% of a move on the upside is what it is showing, and this is after the earnings, where EBITDA has improved by about 23 odd percent, and the profit is also up substantially. Sharaji, do you track Anup Engineering at all? Would you be able to give your view on this one?
No. Sorry, I don't track.
Sure. Apart from this, how are you looking at Birla Corp as well? After the Q4 earnings, a substantial move can be seen on this one too. About 9% higher is what the stock is trading in the pre-opening trading session. Margins have improved for the company, and the company has also announced a 425 odd crore rupees capex plan going forward.
Yeah, I think within the smaller cement companies, this is trading. It is usually trades at most attractive valuation. So I think margin of safety is always in your favor. So Birla Corp could be a good bet to hold on even long term. I think even after today's spike and the good quarterly numbers, even beyond that, they would continue to do well in the long term. So I think Birla Corp is a good bet, and valuation wise, there could be a chance of at least 25 to 30% catch up being played in this company.
Okay, and the one company that I wanted to draw your attention is Inox Wind. We had actually seen a whole host of move in the entire renewable energy space in the recent past, and all of these stocks attracting, be it the solar power makers or the wind power makers, attracting a substantial moves. Now, the company has reported profits after losses in this quarter, year-on-year basis. EBITDA also, there is profitability being reported, so the stock is higher. But would you look at the stock favorably?
I think the potential for these stocks is very high considering the type of changes we have seen. But the only concern that I have is that the regulatory change that when happened, the rebidding thing happened. They could not do anything on the international level. It was largely on the domestic side. While companies like Gamesa, etc., which is most probably Siemens subsidiary, they were doing very good work at the international level also. And there was some rumors, last month or sometime that there could be reopening of this rebidding clause. I think that could be very negative for both the wind power companies particularly, because that is what plagued them for the last 3-4 years. And at these valuations, I think at least if we are not discounting maybe 5 years, at least we are discounting 2 to 3 years for both these companies. So for both Suzlon and Inox Wind, I think the valuation is more or less capturing every upside that they can report, maybe say over the next 1.5, 2 years. So I think it's better to go for something like an SW Solar compared to these two companies.
Ratnesh Goyal joins us, Senior Technical Research Analyst at Arihant Capital Markets. Good morning, Ratnesh. Long time coming. A modest uptick in the Nifty against market expectations for a bumper uptick. What are the one or two stocks that you're looking at for outperformance today on the charts?
Very good morning, Chair. Very good morning, everyone. All the viewers also. Definitely, after the Friday session, it is we can say that it is good opening, and I hope so today we can sustain this opening again. If we talk about the stocks, so definitely we have the two stocks. Maybe we can see some outperformance in the today's or the coming trading session. First one is the NHPC. NHPC is showing the good breakout of the consolidation and rounding formation on the daily chart. So I believe that keep the stop loss 96 rupees, and you can see the target up to the 107 and then 115. And the second one is the Coal India. Coal India is also, we have seen the good volume activity in the last trading session. So I believe that this positive trend will remain continue. Keep the stop loss 460 for the target 485, then 500 rupees.
Okay, Coal India, of course, a weekly breakout on the charts is due as well. The counter being the strongest in the CPSE ETF as far as charts are concerned. Ratnesh, your view on either Birla Corp or CDSL, both of them earnings plays. What are the charts telling you?
So now first look at the CDSL. CDSL definitely is outperforming. Now after the OFX, we have seen the good, good uptrend and making the continue higher formation. So I believe that I think it posted the good result also. It could be I believe that if someone holding this stock, so keep hold this stock with the stop loss 2075. I believe that we can see the target in the midterm 2300 to 2500. And which one second? Just
Okay, Ratnesh, good morning to you. I wanted.
Birla Corp.
Sorry.
good morning.
Go ahead, Ratnesh. Yeah.
Yeah, I was asking the second stock, which Shail asked. Second stock. I just forgot the name. Birla Corp. Okay, yeah, we are seeing that it is a very big gap up in the Birla Corp today's opening. So I believe that definitely it is I can see the fresh breakout in this stock. So if someone holding this stock, keep hold with the stop loss 1620 for the target 1770.
Okay. I wanted to draw your attention.
We have the pre-open rates now morphing into the market open, 70 points higher, 22,540. By all accounts, this is a modest opening. Let's see how it goes on. But for the moment, let's look at the earnings, boys. Remember, Kotak 3.75% higher. We are looking at 1604. Let's look at the other plays as far as earnings are concerned. Britannia, the second best gainer on the Nifty, 2.75% higher, 4888. And I am now also looking at Titan. Let's see what Titan is coming up with. Down 2.6%, 3440. So these are the earnings, boys. Now, apart from that, let's look at what HDFC Bank is doing. 2 rupees higher, 1521.65. Reliance 7.8 rupees higher, 228.75, and Infosys 575 higher at 1422. So fairly okay opening, but like I said, below par from what at least the markets were going in. SBI, this is its earnings week, now record high. So 13 rupees lower, a bit of profit booking happening at 818. ICICI and Axis Bank are in the green. That's really good. Now let's look at what the F&O space is doing minus the index heavyweights. We have profit booking now in both REC and PFC, down 5.9 and 4.2% respectively. We have Coal India 0.5% higher, 476.25. Let's look at the top gainers. Deepak Nitrite and Godrej Properties 5.3 and 4.8% respectively. It's the capital goods sector going strong, represented by ABB 2.8% higher, 68.29. Remember, Birla Corp's stunning earnings have given a push in the right direction for Sri Cement, 2% higher, 26 298. A quick look at NSE 500. Showstopper, Birla Corp, 5% higher, 1635. CDSL, 4% higher, 2165. J&K Bank, 4% higher, 145.30. Inox Wind, 3.5% higher, 637. This is how the show is structured so far, ladies and gentlemen. Ratnesh, anything that catches your fancy, especially Kotak Mahindra Bank, what would you do?
Definitely, like, I think someone aware this 2000 rupees target from broking house. So, but overall, if you look at the structural chart structure is not very positive for this. Maybe some technical bounce because of we can see the target could be around the 1650, 1660, but not a very bullish still at this time and keep the stop loss 1580 for the technical bounce. Definitely we can see, but not so much bullish.
Right, getting Sharadji into the conversation on Deepak Nitride, we've seen a substantial move today, about 5.5% is the top mover in the F&O space, and this is following the positive brokerage report that we've got on this one from Morgan Stanley, where it is given an overweight rating to this stock, and the target price they've increased to 29.85. How would you really look at the stock? It's currently trading at around 2592.
Yeah, I think they have an aggressive capex in the long term. I'm also very bullish on the stock. Maybe the valuations are not very comfortable at these prices, but I think forward numbers could be re-rated substantially because they have faced some headwinds over the last 1.5 years. And now, most probably, I think most of the things are stabilizing. And fluorination is a complex chemistry, so at times you do take more time to stabilize it and get your market in. But I think gradually, even recently, they signed some agreements with Petronet, LNG, etc. I think that's a space that should be very interesting, and I think hydrogenation should, give a very good push to fluorination as well. And the government, most probably, once it comes into power, the new government forms, I think there is a high probability that there will be a lot of focus on alternate energy, where hydrogen could be a focus point beyond solar and wind. So I think that could be very positive for most companies involved in fluorination or any kind of hydrogen business. So that could be a good fill-in for them in the short term, in sentiment-wise. And in the long term, I think most of the capex should gradually start playing out. So that should help them very well. And with this kind of sentiment, I think it's very easy for these companies to trade around 30-35x. FY26, you are expecting somewhere around 95 to 100 rupee kind of earnings. So getting 30-35 times would not be very difficult. So I think it's an excellent long-term bet if you're willing to put in. The management is good, the forward capex is good. And in the short term, I think post-elections, once the budget or the other announcement comes in, there could be a lot of focus on hydrogenation. So that should benefit them big time.
Okay, and the stock has hit its 52-week high also in trade. Apart from this, Sharadji, how would you look at this real estate stock, Godrej Properties? Jefferies has upgraded the stock, given a target price of 31.75 on the basis of the earnings as well, and the FY25 or guidance, which has exceeded the expectations largely, and the stock is now shot up about 4.5% in trade today. Is there more steam left in this one?
A difficult call to make in terms of Godrej Properties, specifically with the group issues now more or less out. But the valuations, I think, have become a bit stretched, and most probably we are discounting 3-4 years forward easily in most of the real estate stocks, barring maybe a Shobha or a Prestige, or maybe a macro developers. So I think barring these are some of the smaller companies you could look at, but the frontline companies, I think most of the larger companies, the valuations are more or less factoring in 3-4 year kind of views. Though I'm not negative on real estate, but I think at these prices it would be very difficult for you to make more money out of these stocks. So I think it's I would avoid these stocks. I would rather bet on a Shobha, Prestige, the more south dominated or the more valuation wise, I think there is a margin of safety is much better in those stocks vis-a-vis a Godrej or something. But I think the development within the group and the type of land bank they have is a very positive development. Monetization obviously will take time. And at these valuations, I would not be very comfortable. I think most of the positives are priced in for Godrej Properties.
Okay, I think Coal India deserves a lot of attention. We now have, to my understanding, a fresh 52-week high. I just want to see what are the volumes. About 122 crores worth of transactions have happened, 1.3% higher. This is fairly stable, and this is also accompanied by a decent uptick in open interest. This was Ratnesh's top pick as far as prices are concerned. The Nifty is quiet as quiet can be, 33 points higher, 25,510. Let's take a detour into the broader market. Fairly even Stevens, 1,000 stocks in the green, 916 in the red. As far as the total indices are concerned, we track 19 for you, ladies and gentlemen. Out of 19, just 6 are in the green, led by the Nifty IT index. Remember, Sharadji had pointed out that he sees deep value in the IT space for the moment, so that's resonating with his thoughts. The top loser is the Nifty PSU banking index, 2.7% lower, 73.25. Remember, this is a bit of a profit booking happening near record high levels. We shouldn't be worried at all. It's the infrastructure space taking it away. Siemens 2.5% higher, 6,020. And now I think strength is returning in Kotak Bank. It was opened about 3.5% higher, now 3.9. We'll do an intraday chart check with that. Ratnesh, anything that catches your fancy?
Yeah, once again from the mid-cap stock, I like to here mention the Rainbow Childcare. The Rainbow Childcare, after a long time, we are seeing the good breakout after a long consolidation. So today we have seen the fresh breakout. So definitely it's as of now definitely 8% up. But if somewhere around 1560, 1570 we get the level, it could be the good buy with the stop loss 1510 for the target 1650.
Okay, that's the view coming in. I think there is a bit of a selling pressure now building up. Let's look at the advanced decline ratio in the FNO space. This is now sort of deepening in terms of even the selling. Yes, we have 88 futures in the green, but 99 futures in the red. So in the first 5-7 minutes of trade, you have news driven stocks doing pretty well. Britannia 3.5% higher at 1435, Kotak 3.5% higher at 1615. Apart from that, Infosys, Oracle Finance, L&T Mindtree are in the green. The realty space has Godrej Properties running up 5% higher. This is something to be looked at, 2719. Although the broader markets are not in sync, but Ratneshji, what are Godrej Properties charts telling you?
Godrej. Definitely Godrej Properties. Today we are seeing the gap up open, and it was the outperforming the Godrej Property. So definitely I believe that it's still upside. We can see if the stop loss 2640, I believe the target would be around 2780 and 2800.
Okay, that's how the price action is. Deepak Nitrite, Sakshi has already pointed out, now 6.5% higher. This is accompanied by a 5% uptick on open interest. So this is really interesting. Futures in the chemical space are doing pretty well. Deepak Nitrite, this is good at 2602. How interesting! It's reclaimed the trajectory of its all-time high, which was years and years ago, October of 2021. So the chemical space, ladies and gentlemen, is now resonating. Deepak Nitrite highest since almost March of 2022. Let's see how it progresses. Sharadji, I'm sure this is a sector close to your heart. A lot of value destruction happening over the last 3 odd years, and prices are nowhere near what record high levels were. Some good chemical stocks that catch your fancy?
Yeah, Deepak is certainly one we have already spoken about. Beyond this, I think On the agrichem side, I would be very bullish. I think there's not been any catch up on that side. And the way we are seeing a catch up play on this side, I think most probably over the next 6 to 9 months, agrichem could play a substantial catch up. So UPL obviously is a top bet. I think a lot of inventory rationalization is happening within that space. And once that recovery starts happening, I think you would see a very strong revival in prices as well. So I think UPL would certainly be one. Add to that, PI Industries. I think there could be substantial improvement happening over the next 1.5 2 years. So these two stocks could be doing very well over the long term.
Okay, got that. Let's again look at some of the other big movers in the markets as far as the F&O space is concerned. Apart from the ones that we've discussed like Kotak, Godrej Properties and Deepak Nitrite, ABB India is pulling up in trade about 3.4% higher. Shree Cements is back in focus. Siemens, as was highlighted by Shell, is also in focus today, 2.4% higher. Aarti Industries from the chemicals basket is again moving up. Real estate space, you have Oberoi Realty, that's up by 2.2% odd as well. That's the kind of move that we are seeing across the board as far as the F&O space is concerned. Ratnesh, on Britannia, do you see this move extending at all?
Britannia, definitely on the daily chart it was underperforming, but now today we are seeing the start trading above the 200 moving average line. So maybe today closing will be very important. So I believe that 4950, 4970 will be the supply level for this stock. So if someone holding from the lower level, I say that book profit around that level. Because the fresh breakout will come only above that. So, if anyone want to enter the fresh entry, I will suggest them to just wait for some more time. Let the stock close above 4950, 4970. Then you can take the fresh entry. But as of now, just a little bit wait, and someone holding from the lower level, book some profit.
Okay. Ratnesh, I also want you to look at India VIX. Very strong, surges being seen as of now. I think 11 odd percent at 16.2 odd levels is what India VIX is at right now. Is the volatility going to be extremely high in today's trading session as well after we've seen the last week move on India VIX?
I believe that this whole month we will experience a very huge volatility because we are now going day by day near to the election result outcome. So definitely we will see that volatility will increase now. If you look at the level wise India VIX, so I am little bit worried like 16.69 or 16.70. You can say that. If it close above that, then definitely this volatility will maybe more increase and it come up to the 18.79, 18.80 or something like this. So definitely this volatility will going to increase.
Let's also look at some other parts of the market, ladies and gentlemen. Now I think the momentum is gathering, and the Nifty is up 102 points. Kotak Bank is contributing 25 points. ICICI Bank is contributing 23 points. TCS is contributing 17 in the green. HDFC Bank 13, and of course Infosys 10. What's pulling the index lower ahead of its earnings? SBI, nothing to be worried about here. Titan, yes, post earnings. Bajaj Auto, L&T and Hindalco. So these are the pullers and draggers on the market. What's really shining is Kotak Bank. I think Ratnesh will have to now do the options check for Kotak. It's the top traded counter by a huge margin. In the green, 4.2% higher, 1265 crores worth of transactions. I'll request the PCR to fire the 1620 Kotak call, which is now at the moment trading somewhere like 42 rupees. It's already higher by 17.85. Would you have, Ratnesh, a view on this one?
Yeah, definitely. Like if someone, as we mentioned that because we have seen that Kotak Bank was underperforming, but today because of the news, we are seeing some positive momentum, some technical bounce. As I mentioned, that 1660, 1650 is may come. So in coming days, 1 or 2 days, so definitely like 1620, if you go with the at the money call option, so there is a good chance that we can see the very fast movement in this option price. And that as we can see that 11% is open interest increase in this particular 1620 call options in the Kotak Bank. So I believe that just keep the stop loss around 25 rupees, and we can see the target around 60 and 65.
Okay, the 1620 call, ladies and gentlemen, has seen an earlier high of 90 rupees somewhere in April 25th. That's the monthly expiry of April, and now at about 42.35 in that range. Keep this in the radar as far as the long side trade is concerned. Lots and lots of activities happening now. In the futures, Kotak is now up 4.2%, and I see very, very strong traction coming in. Let's see another interesting data on Kotak. It's the top traded index future. 28,000 contracts have already been sort of done. Each lot size is of 400 shares, and this is really good. The top three stock futures, we've discussed all three of them. Godrej Properties gaining ground now, 6.8%, Deepak Nitrite 6.7%, and Kotak 4.2%. In the volume play, remember, as far as the Nifty is concerned, why Nifty? Even the NSE 500, Kotak is the top traded counter, 1317 crores worth of data trades that have been done. And let's look at Kotak in terms of volume buzzers. No, nothing much there as of now. About 50% of 5-day average has been traded. Titan, now pain starting. Already 118% of 5-day average volume has been done. 13 lakh shares. The counters down 4.5%. 3370. Valuations have been an issue, and the earnings were disappointing. Ratnesh, what is a buy zone for you when it comes to Titan? Where would you sort of step in and say, this is something that I would like to buy? Titan at the moment is at its lowest since November 24.
Yeah, Titan. So today we are seeing that gap down opening and below the 200 moving average. After a long time, it is starting trading above the below the 200 moving average. So today closing will be very important for the positional trade. If anyone want to take in, 3350 is the very crucial important support level. If we get the close below that, maybe this selling pressure will remain continued for some more days. So I will wait for the today closing session and the tomorrow's follow-up. If we get the follow-up selling in the tomorrow trading session and start trading below the 3350, then I will wait for some more time, and then we may see the trading below the 3300 level around the 3260, 3250. So that level could be the very attractive. So I will wait for today and the closing session.
Okay, it's panning out to be an IT focused kind of a day. Among the top 10 movers on the Nifty, you will find a lot of Titan heavy, IT heavyweight names like Tata Consultancy Services, LTI Mindtree. You also have Infosys, Wipro, HCL Technologies, Tech Mahindra. All of these stocks are buzzing, and they are trading at the high point of the day now, with the Nifty IT now up by 1.2% as well. And Sharadji, you were talking positively about the IT space, and you clearly talked about how this space could be now in the thick of action, and clearly we are seeing the move build up. Where exactly would you keep your focus among the large caps as far as the IT names are concerned? I believe you said Coforge in the mid cap IT space, but in the large cap IT space, where would you keep your focus now?
I think Infosys remains my top bet, and LTIM if you are just looking one roll below. So I think LTIM Mindtree for much larger appreciations, and Infosys for decent appreciations. I think initially with targets of 1800, 1900.
Infosys remains your top bet. Ratnesh, to you, which stock among the IT space looks technically positive as of now, where momentum can be tracked and probably fresh positions can be taken?
If you look at the technical side, so I believe that we are seeing a very good consolidation in the TCS, and the TCS after consolidation, maybe we can see the once again the breakout in this stock. So just once it start trading about 3950, we can take a trade in the TCS. So it can touch the target after that 4130, 4150 level. So TCS could be the good bet about 3950 with the stop loss 3905.
Okay, so you'll be focusing on TCS and Infosys, so two of the heaviest weighted stocks in focus as far as both our guests are concerned from the IT pack. Apart from this, let's look at the stocks that are actually not doing well also. Private sector name, the PSU names, these are the ones that are looking at some profits being taken off the table, be it energy names or the oil and gas names like India, IOC, etc. Let's also look at the defense names like Hindustan Aeronautics. They are seeing a decline today. BEL is declining today. Power majors like NTPC, Power Grid, after stellar run in the last 1 week, they are seeing some decline today. Of course, REC and PFC are the top losers as far as the FNO space is concerned. A lot of metal counters also seeing some declining trend after last week's run up, NMDC, etc. They are seeing some profits being taken off the table. Sharatji, would you suggest investors to look at buying this dip, or do you think the best of the rally in the PSU space is now behind? It's now time for some correction to happen and one must wait it out.
Yeah, I think largely that would be the theme. Individual stocks, maybe 5% of the basket might have a different story. But most of it, I think, yeah, in terms of valuations, they have come back to median valuations, and unless and until performance uptick happens over the next 6 to 9 to 12 months, I don't see much of re-rating potential in most of the PSU names. And today the project financing norms have kicked in. That is why you are seeing the speculation about that. That is why PFC, REC, etc. are seeing some issues. Even the PSU banks, because they do a lot of project financing, so there could be some additional provision burden on these banks and NBFCs. So that is why you are seeing that correction in this space. But I think even otherwise, if you look at the defense names, so most of them are rigged up. They are trading at 20-22 times forward. It doesn't leave much on the table. So I think most of the immediate positives, at least 1.5, 2 years, are priced into most of these stocks. So it's better you avoid it for some time, let it cool off, let the performance come up, and then maybe you again bet on a re-evaluation that they will get rated upwards.
Okay, there is a breakdown, ladies and gentlemen, as far as the Nifty is concerned for the moment. I don't think so 22,600 was something that was so easily overcome, but now pain seen across the board. The Nifty 500 is now in negative territory, so is Nifty. 500 now down 0.5%, 106, and it's the entire PSU space that is in intense pain. We track 78 PSUs for you at market today, and out of 78, just 5 of them are in the green. Massive selling across the board. This is the project financing norms that have come up, and last week's favorites and darlings, PFC first circuit down 10%, 433, RECL 8% lower, 513, BHEL 6% lower. So companies that take project finance such as BHEL, and companies that offer project finance such as the whole host of PSU banks, as also PFC and REC, are in the red. I'd just like to see what IREDA and IRFC are doing. Remember, the railway space, they are the project financiers. Okay, IREDA is okay, I don't see it somewhere here, but IRFC is down 1.85%, 154.50. okay, that's how the picture is structured. The theme is now getting a bit vitiated. About 1381 stocks are now in the red, compared with just 600 in the green. So these new norms on project financing are now hitting sentiment. All I see is a sea of red on all templates that I track, And let's look at the advanced decline within the NSE 500. Just 115 stocks out of 500 are in the green, 386 in the red. Within the Nifty, it's weakening, only 23 in the green versus 28 in the red, and that's how it is structured as far as pricing is concerned. Let's see what Kotak is doing. It's muted a bit, still up 4% at 1632. Any record highs for today? Let's take a look on that one, because the sentiment now is getting a bit dampened. Okay, all-time highs, ladies and gentlemen. We have Rainbow Medicare 1602, CDSL 3% higher, ABB 3.5% higher, Fortis, Siemens, M&M, Zomato. These are the names that are worth discussing, and Escorts a percent higher, 34.53. Sakshi, what are you watching?
In fact, Rainbow is something that Ratnesh had highlighted as his topic also for the day. So kudos to you. On a weaker day, the stock has continued to soar higher. Where do you see the next target on this one, Ratnesh, after 1607 has been seen?
Yeah, so my target was 1650, so it almost achieved that. So I believe not. If, I believe that if someone buy on our recommendation, so I believe that book some profit in this stock, or keep the trailing stop loss 1550. For the next target is 1720, 1750. But book partial profit at least. Yeah.
Okay, book partial profits as of now. Okay, the markets may be weak, but there's one space that continues to try, trade positive, and that is the hotel space. Let's look at EIH Hotels. It's up 9% in trade today. Very strong move can be seen on this one. Apart from this, Viceroy Hotels, that's been in the thick of action all through last week, and it continues to move higher as well. Let's also track how the others are doing, maybe Chalet Hotels or even Indian Hotels for that matter. Let's look at that space as well in case that continues to see some positive move. How are you looking at the hotel space, Ratnesh? Is this space continuing to trade positive on technicals?
Yeah, definitely. All the hotel stocks is performing well, and then the vacation times is going on, so it will perform definitely very well. So in this sector, I like it. Taj GVK is very well, and still not stressed so much. In last trading session, we have seen the good volume activity in the price breakout, and today's it is consolidation. So I believe the 400, 390 level is the good support zone, good buy level. Keep the stop loss 370. So I believe the target could become around the 480 to 500 in the mid-term.
Sharatji, would you give your view as well on the hotel space? Anything that's come onto your fresh radar, because it's the onset of summers and then vacations and travel demand will spike now. Is this a good time to take an entry?
In terms of valuation, I think across the board, I would not be very happy. In terms of performance that can kick in, yeah, certainly, I think there is a lot of scope for improvement. There could be a lot of improvement in the room rents. They've already skyrocketed. There could be some more improvement. Even occupancy has been going up. And I think as we move forward, long term, it is very positive. I think local travel is picking up in a very smart way. One stock, if I had to pick, I think Royal Orchid Hotels most probably is very decent in terms of the valuation it is trading at. If you look at comparable valuations, I think Ratnesh just now spoke about Taj GVK. It has been one of my top bets for quite some time, but it has moved up very sharply. So I think a lot of the improvement that has to play out has already played out. Indian hotels, East India hotels have aggressive capex plans, so I think that should play out over the next 3 to 4 years. But as we all know, most of the capex in hotels is long gestation. First, they need to come up over a period of time, and then to get the occupancy higher, it also needs another round of improvement. So considering the current numbers, I think the type of hotels or properties that Royal Orchid has and the way they have improved over the last 5, 7, 8 years, I think it is providing me comfort in terms of valuation. It is attractive in terms of the valuation it is trading at. So I think if I had to bet on hotels, I would go with Royal Orchid Hotels at this point.
Okay, I think we must take this opportunity while Sharatji is with us to discuss Infosys in detail. It's in any case a shining stock today, up about 1.8%, 1450, and it's providing what it can in terms of support to the Nifty. Shariji, the PCR will draw a long-term chart for Infosys. Of course, you are a value hunter, and therefore you like, the fact that this is way off its all-time high of about 1900, the counter below 200 DMA. In a day and age, Shariji, when people would want to go with growth, go with momentum, given the general sentiment in the market, what attracts you to Infosys? The entire sector is in trouble. Guidance is being cut. BFSI is in pain in the US. Nothing seems to be going right for Infosys. Yet you say you like it.
So as you rightly pointed out, nothing is going in favor of the company. And we all know that markets most probably discount most of the negatives in advance. So I'm assuming there are two concepts according to which I invest. I usually look at, a margin of safety in terms of valuation, in terms of historical valuations that is trading at very reasonable valuations. The expectations, as you rightly said, that also boils down into numbers. What are we expecting? 7 to 10% growth over the next 2 years. IT does remain a pivot place, I think, globally also. The third problem is the slowdown in North America, basically discretionary spending and the BFSI slowdown. So America has been facing some issues on the BFSI side. And most of the problem, if you look into detail, is largely because of the rates galloping much higher. And my personal opinion is that most of this improvement in inflation and, the major problem has been inflation with respect to rates is primarily because of rebasing, debasing effects and the type of handouts they did during COVID and post-COVID. Now, gradually, that should come into place. And most of the banking issues have been because of higher interest rates, because they could not really, have the ALM mismatch in place. So that has been the problem. And I think both these issues get addressed with lower interest rates. And I don't believe that US is on a very strong growth trajectory, which should lead to higher inflation. At best, there should be in a Japan-like situation where not much inflation would happen. So I think gradually that should peter out, and most probably the banking problem should also peter down. That should result in improvement in the broader sentiment regarding, the broader economy around US, Europe also. And we all know that most of these IT companies have around 55 to 60% exposure from BFSI, Europe, and America. And once the discretionary spending turns around and your interest rates go down and your interest around these things, so there will be a very sharp turnaround. If you remember during COVID also, we had similar expectations, and then suddenly this BFSI capex leapfrogged and the IT companies just got re-rated over the next 2-3 years. So I think this is one more space, this is one space where that re-rating would happen again. And the valuation comfort gives you a very strong margin of safety. So I'm expecting this 10-11% expectation can easily bolster up to 15 to 20% kind of growth expectations. And they are already investing into AI and new avenues through which they can grow the business. Most of the IT companies are working very hard to get the consultancy business ramped up, which is a high volume business and a sticky business, and the margin should also be better. So I think IT usually has been a body shopping kind of work that we have done, but now we are getting into that innovative phase where they will do a very different league of work, which should be high margin, sticky in nature. And if you look at the larger deal wins, they have not gone down. Most of the companies have reported better larger deal wins. So I think the long-term trajectory remains very positive. Once the sentimental thing around discretionary spending, North America interest rate dies down over the next 3 to 4 months, there is a high probability that most of these stocks will get re-rated very strongly.
No, Shariji, let me continue playing the devil's advocate and you defending the thesis on Infosys making a sensible choice at this point of time. Look at how artificial intelligence is now almost taking away entry-level jobs within the software space. Look at how for the first time in 24 years there has been a net contraction in terms of the big tech firms hiring. And look at the fact that you buy Infosys for the buybacks, you buy Infosys for probably a decent management. My argument is that at a time when India is shining, why not look at sectors where expansion is happening, why look at sectors where the story is old? I mean, you are going back to an old college sweetheart, is my point.
I think expansion is happening is good. So there are spaces there a lot of expansion is happening. But if you look at history, wherever we look at rapid expansion and change, it is associated with a lot of turbulence as well. So today, most of the defense stocks are very attractive when you're getting at 10, 11 times. There was high margin of safety that they would bolster into something else because the offset clause was kicking in. But now them trading at 22, 25 times, and there is a lot of, if you understand the details of the business, there could be a lot of lumpiness, lot of delays. In US, there have been projects that have been delayed by 10 years, 15 years, 2, 3 governments change, right? So I think people don't take that into account when momentum flows in your favor. So right now with IT, momentum is not in your favor. So you don't want to go with IT. So if I get something else where I find good growth prospects, and if I believe that IT cannot grow, so when I look at IT as an enabler, I can't see any industry that can grow without the support of IT. And I think that is one space that will grow leaps and frogs. Whether in the Indian context they will grow or not, or in the American context they will grow or not, what COVID has done is they have expanded the scope of IT from being something that belonged to the top companies to something that has been adopted by the mass, that is the SME segment or the smaller companies also. In India also, if you look at the type of change that IT is bringing today, if you talk of UPI, direct benefit transfers, everything is connected to the IT ecosystem that you build around it. While yes, any new technology when it comes in, there is a lot of doubt that how it will impact us. Today, AI could impact a lot of the programming side of it, but also it also cuts down on your time frame that you require to do the mundane job, and you could focus on the more R&D specific or optimization improvement. Even in the last 1.5 year, when you are very doubtful about what would happen to IT expenditure, the expenditure that is improving my efficiency is not going down. So I think that is why the consultancy businesses should go up, and most probably the mundane side of the job, which was more labor oriented, will go down. But the innovative side of the business will grow at a very rapid rate. Maybe you have a slowdown of 6 to 7 months when this transition happens. But if you look at the difference, the way IT companies in India have behaved over the last 1.5, 2 years, earlier for every business where, say, an international company would come into the business, say, 5 years before, and the Indian companies would be laggard and follow into the business once it has been established and they would get into it. But today you look at AI and any of the other businesses or more a meta kind of story. Most of the IT companies in India have moved at par with the larger players globally. And I think that's a very positive development. So most probably the benefits they would reap out of it would also be very positive in the long term.
Okay. On Infosys, Mr. Avasti, do you see 2500 coming on Infosys, and if yes, then by when?
That's a hard task. 2500 is a bit of far off. I think you need to do the maths. If you consider around, I think they would continue to grow at somewhere around 15 to 20%. So you could do the maths, and I think easily they would get, if they grow at around 15 to 20%, anything between 25 to 30 times would be easily possible. So I think extrapolate that number and think about it. Immediately, what I'm looking at is over the next 2 years, as they grow at 15, 16 to anything 20%, there is a high probability that it goes back to 1800, 1900. And if you just extrapolate the maths, I think you could get the numbers by when it will get 2500.
Okay. Apart from this, the one space that's continuing to drag today is the entire financing space, like I pointed out, REC, PFC, and there is this one reading from the street that perhaps this is the aftermath of RBI's proposals of tightening the financing, and that proposal of tightening of the project's financing rules. And this means that probably for these banks, NBFCs and financiers, they will have to do higher provisioning for infra, non-infra projects as well, and much ahead as well. How much more pain do you see if this proposal gets through? Would this entire space have to bear, and would this mean a dampening effect, Mr. Avasti, on the profitability of these banks that have been actually soaring higher, and now is the time that deeper correction could start?
See, in terms of PSU banks, yes, a deeper correction might happen because I don't think that forward growth rates and the numbers they will put in are being justified by the valuation at which they have already started trading at. Most of the smaller mid-sized PSU banks might see a bit of brunt. In terms of maybe starting of a dampener effect where most probably the forward numbers or the over optimism that we are seeing across the board on these banks would die down. But in terms of this having a dampener effect long time on a standalone basis, the project funding, I think the project regulations, that should not be a problem. I think this is a one-day effect. Most provisioning norms are like that. And if they are not to make it stringent, I think the larger part of the growth would come from, the type of long-term growth rates that we are looking at. And I think project financing is something that is going to grow leaps and bounds in India. Maybe some of your balance sheet requirements goes up. So maybe 1 year you have a subdued number because of that coming into effect. But after that, the base effect kicks in, and that's not much difference. So I don't think that's very material in the long term. In the short term, yes, maybe it dampens your 1 year forward numbers, etc. But most of it should be taken care of a very healthy and strong growth in the project financing business. So for companies where I'm confident in terms of valuation, I'd use this dip to buy into.
Okay, ladies and gentlemen, we are now just 2 minutes away from wrapping up market today. Let's look at the positives that we had looked at. Kotak Mahindra Bank again, 1620. And now the call that we had highlighted as far as the options side of the trade was concerned, the 1620 call will now come into the money. It's now still at about 42, 43 rupees. But keep an eye out on this one. This is now going to move exactly as the stock price does, and this is something to be looked at. Let's look at the volume on Kotak. How has it moved? At the moment, when the last time we had checked, about 1300 crores worth of transactions had happened on Kotak. At the moment, in terms of volume, this is 1678 crores. The counter is now about 4.8% higher. This is the positive as far as markets are concerned. Pain, ladies and gentlemen, across the board in the public government PSU financing arm. PFC, the top loser on the FNO space, has now gone below its first 10% circuit, 11% lower, 431. RECL is still 10% lower, 509. And this is accompanied by a very sharp rise in open interest, 4% higher for PFC and about 1.1% lower on RECL. So this is the structure. Earnings being rewarded, Kotak is a very big beneficiary. Then you have Godrej Properties, 6.9% higher, 2764. And as Sakshi had pointed out, it's the chemical space that's buzzing. Deepak Nitrite is the top OI gainer, up 6% in the open interest, also up 7%. Fairly strong selling pressure now on REC and PFC. Sakshi.
All right, many thanks Ratnesh and many thanks Sharad for being with us on this very special edition and sharing all your wonderful stock ideas, strategies for all our viewers. Truly appreciate your time with us on Business Today, and here's hoping to see you back on Market Today very soon. With that, hope you have a great day ahead. Viewers, we'll wrap it up at that. Many thanks for tuning in into the morning edition, but do stay tuned. A lot of action-packed conversations will be following suit on your screens on earnings. As far as daily calls is concerned, I will come back at 12 as well to address all your stock related queries with top market experts, so do tune in for that too. Until then, many thanks for tuning in.
कुछ समय पहले तक राहुल गांधी जी कहते थे, डरो मत, डरो मत, डरो